Turbo Trading with head trader Robert Knight, MBA.
So this is a talk on capitulation, and we've done videos before, and it's January 27th, 2022. We've done videos before on capitulation, but I wanted to talk about capitulation in today's market with the SPX, Standard & Poor's 500. And have we seen capitulation, or is this just a continuation of the bear, into a bear market type pattern? So this is a huge, long rising channel that we saw, a couple of pullbacks. And one of the things about these pullbacks, I had said, even though these were sharp, I said in the longer term, they'll just look like blips, small blips on the radar. And it's exactly what they turn out as this thing continued to rise dramatically for the past 10 years. I can't go back far enough for that, but even here from the last couple of years, from the big sell-off with COVID, but look at with a lot of money being given out by the feds, putting liquidity in the market, we get this huge bull market. But now we see that when we got up into this area here, it was very choppy. 6% down, 6% up, 6% down, pop 6%. But now we've had a 10% correction from the high, from 4,800 down to, call it 4,200. That's 600 points. That's about 15%, not quite 12% correction here. So that is in the realm of a bull market correction, and not a bear market yet. But I'm going to get to capitulation here shortly. But you can see that this is a wave 1 down, pops for 2, and then here's your wave 3 down. It's in here 4 consolidating. If this rolls over, this could trade down to this 4,000 level, 40.50. That would be a 20% pullback. That would be signs of, that would confirm that it's a bear market. The chart is bearish, but it's not called a bear market until after it actually, in hindsight, it becomes a bear market. It's a bearish chart. It trades down to 40.50, then that's a bear market. But everything is so accelerated. Things happen so quickly now. What used to take 6 months, 3 months, here in 3 weeks, a 1, 2, 3 wave down. Okay, so the question is this capitulation, or is it just selling, and then we get consolidation in here, and then the next wave down? Capitulation, usually, if you look at this candle here, and I'm only pointing it out, not that this was the capitulation trade, but I'm just pointing it out that this pattern here, like this, where you get a sell-off, a big spike down, it closes near the bottom, and then the next day it pops up. If that's on huge volume, and it wasn't in this case, but if that's on huge volume, like we saw here, then that's capitulation. That shows capitulation. What we have here is a 3-wave down. You get this huge sell-off on massive volume, but your next day is an inside day, and it's just flagging in here now. That's not capitulation. Capitulation is down and then bouncing back up, where buyers come in, they see value. We're not getting that here. It's just remains to be very very choppy. The markets are very choppy. So I think you get another wave down. This is wave 1, 2, 3, 4, and then another wave down to put you into the bear market. Now we see that the 15 is traded through the 50. Both are headed down, and the SPX is under the 200-day moving average, and it's rolling over. Very bearish. Very, very bearish. If this 50 comes down and crosses the 200, that's the death cross. That is the death cross. This is bearish, this cross here, and this being under the 200, that's bearish. So the point is that the markets are, in it's a bearish trend, and it's just flagging in here. This is not capitulation. This is huge volume, and you would think it would be capitulation, but because the volume, there's no bounce, then it's not capitulation. There's still buyers in there. There's still people that have hope that this is going to be the bottom. When you have capitulation, you have a big rebound where everybody says, aha, we've hit the bottom. Here, these people, there's a lot of sellers that say, no, we're not at the bottom yet. There's a lot of work to be done yet to the downside. And so we're going to know here in the next 2 weeks with earnings come out, and actually Apple tonight probably be a good telltale sign. So if earnings are in line or, softer, then we could get another sell-off as we see the price earnings adjust. The S&P index is a function of, price earnings of all the stocks. And if interest rates are going up and liquidity is being withdrawn, investors are going to want a discounted earnings ratio to offset so the price goes down, to offset the increase in interest rates. So they want a better deal. They want to buy stocks at a better deal than at a high value when interest rates are at zero. So the answer to the question, no, it's not capitulation yet. If this rolls over, it could really get ugly. This is at a critical juncture right now, and failure here takes it down into bear market territory.
Don't forget to like and subscribe to our channel. Reach new levels of trading proficiency. Become a member at turbotrading.biz.